Well, Chris, when I start these things, I usually welcome people to Puerto Rico, but you live here.
That's right.
Great to have you here.
Absolutely. Thank you for having me.
You just got back from Portugal last night, 2 a.m. How was it?
It was great. We had a good time. 10 days, saw 4 big cities, and ate and drank way too much. So I got to detox my liver for the next few days.
Well, I appreciate you coming out on a Sunday morning right when
Sure.
you're back for this. Chris, what I really wanted to talk to you about is SBA loans.
Okay.
But you've got such an interesting professional development story. Like, I think I want to start going way, way back.
Okay.
So where did you get your start?
Where did I get my start? Professionally or personally?
Professionally.
Okay. Professionally, out of grad school, I worked at a high-tech startup in suburban DC, Washington, DC, before that was trendy to do. And quickly got into sales and marketing, did very well, to the point where recruiters came calling, and I listened, and within a year and a half, I joined GE Capital. Back in the day when GE was the most respected, admired company in the world. I started working in their small business group and was only in the Washington, D.C. office for about 6 months before they offered to move my wife and I to Denver, Charlotte, or Orlando. And as a enlightened Midwesterner, as I say, I've been trying to get to the sunshine of the South for many years, and I just keep going further south, of course.
You do. Yeah.
So we moved to Orlando. That was 27 years ago.
Okay.
Yeah. And then I was there for a while. Then I joined a competitor at the time. GE Capital was the largest non-bank lender at the time. One of their big competitors was Heller Financial out of Chicago.
I remember them.
And I joined Heller, and then of course GE promptly bought Heller. And I always used to say, you know, if you just got rid of the cap on compensation, I could have stuck around longer. You'd have to go spend billions to buy Heller to get me back. But from there, I joined Marsh McLennan companies for a couple of years and basically did credit enhancements using insurance capital. And then of course 9/11 hit, and Marsh was decimated. It was after Cantor Fitzgerald, that was the second largest casualties, unfortunately. And the whole thing about, you know, my first kid was born 11 days before that, and my wife didn't want me to travel, and actually I lost some friends in the first tower when it got hit. But that was also a big changer for me, and I know a lot of other people, in that, you know, sometimes these big life moments make you reassess things. And in my world, I said, well, I want to get back into small business lending, but I want to do it my way. I want to be the one who makes those decisions. I don't want some arbitrary, you know, credit decision to come down on me, which is what had happened at GE Capital and at Heller in the past. So I launched my own company, and that was in 2002, which was called Mercantile Commercial Capital. And we were very successful. We were the first small business lender that was focused exclusively on SBA 504 loans, which does a lot of commercial real estate and heavy equipment. And ultimately, we ended up selling that company to a local bank in 2010. But we had been on the Inc. 500 list of fastest growing companies 3 years in a row, and have done a whole bunch of things. And so I stuck around at a bank, and I wasn't really excited to be at a bank necessarily. I hadn't grown up in that world in a bank. I'd always been a non-bank lender. And I stuck around for about 3.5 years. And they kind of thwarted some of my growth plans and didn't do some of the things they probably should have. But at the end, I made a play to buy my baby back from them. And what I didn't know at the time was they were trying to sell the bank to a bigger bank. And they wanted to keep the parts all together as opposed to splinter something off. I even had financing lined up to do it, and ended up wasting about 60 days of my life going through that process. And I ultimately just left and started my last company, which was Fountainhead Commercial Capital. And I actually got it started 6 months after that, a few days before they actually consummated their sale to the bigger bank, which at some level that was gratifying to me that I got it done before they did.
So that was in 2010, 11-ish?
No. That was now we're talking 2015. That was 2015.
Okay.
So, and then Fountainhead, again, we've been on the Inc. 500 list 4 years in a row, lots of tremendous growth. Got into other SBA loan programs such as the 7A, which does a lot of business acquisition financing in addition to some other, you know, working capital and all sorts of different things. And we were one of the small business lending companies, SBLC. So we were one of 14 non-bank lenders who had that exclusive license. It took about 18 months for us to get approved. And we got approved 3 days before Christmas in 2018, and then the government promptly shut down. So we didn't actually announce things until the end of February of 2019. And so, as you know where I'm going with this, so February 2019, we're on a great trajectory. We've got the new loan program that we've launched. Everything's kicking butt, and I'm about to get rid of my partners at the time, which was a hedge fund and an asset manager. They were sort of ready to move on. They were a stepping stone for me to kind of get to the next phase of the business. And we did a whole dog and pony show with investment bankers. We're about to sign with our one that we selected in early March of 2020, and then the whole world changed.
Yeah, I remember.
And
I met you shortly after that. I remember you with the PPP and all that sort of stuff.
Yeah, that was a crazy time.
So on the run up to the COVID era, you guys at Fountainhead, was it all government-backed loans? Was it all?
No, not all. No, we did some low loan to value conventional real estate loans. Yeah, but I would say 85% of what we did was either SBA 504 or SBA 7A.
Okay.
Yeah.
And let's talk about what is the 7A?
Sure. So 7A loans go up to $5 million at the moment, although there's legislation in Congress right now to take it up to $10 million, which would be nice, and it's long overdue. They haven't indexed the cap.
Seems like the cap's been at that for a long time.
It's been there since 2012. Actually, was the last time it moved up, and so it's overdue. But you can use 7A proceeds for just about anything related to business. We do about 60% of our volume is business acquisitions. So one small business buying another. We do a lot of working capital loans through that program. We also do commercial real estate, owner-occupied commercial real estate, equipment, partner buyouts. We do a lot of partner buyouts with that program, leasehold improvements, ground-up construction on real estate, all sorts of different things. It's the most versatile of the SBA products.
And what's the benefit of a SBA loan? Is it that the lender or the borrower couldn't otherwise get financing?
Well, from a regulatory standpoint, the lender has to prove that is the case. And oftentimes what that means is a lender is actually signing off on the loan saying, we would not otherwise make this loan under the same terms and conditions that SBA can provide. And so a real good example of that, Paul, is on owner-occupied commercial real estate. Most banks will finance things at 75 to 80% loan to value. If they wouldn't do that for that client, for whatever reason, maybe they don't have enough net worth in the business or personally, maybe their bank is just not comfortable doing anything more than 80% loan to value, that enables them to say, we only will do this under an SBA program. So that's an example of that. Yeah.
And SBA doesn't provide the funds or a guarantor, is that right?
That's right. SBA, think of it like an insurance product.
Okay.
Yeah.
So what is a typical, when you think about like a partnership buyout or business acquisition 7A loan, what are typical terms in today's environment?
Well, it depends. Anything non-real estate backed, you're going to typically do a 10-year term, okay? No balloon payment. It's fully amortizing the 10 years. Most of those products are done at 90% financing. Not all. There's a few situations that you could do higher than that, but mostly it's 90% financing. And by comparison to ordinary conventional banks financing it, you're looking at 70, 80% at best, sometimes even lower, depending on the use of proceeds. Yeah.
So basically, somebody's coming up with 10% of the equity of the total transaction value, whatever it is. The bank comes in with 90%.
Yeah, that's the biggest one. I mean, I would say it's much lower down payment, which is very valuable for most small businesses because they can preserve more of their precious capital. Usually it's a half to a third of what the alternative is. They're getting a longer term, business acquisitions, for instance, if you're able to get one done with a conventional bank for a small business, which isn't very often, you might get it on a 3 or 5 year term, not a 10-year term. Banks are not going to do that conventionally. Same with partner buyouts. You might get a 3 or 5 year term versus a 10-year. So you have a much longer repayment, which means it doesn't impact your monthly cash flow as much. So those are two big things. The third thing I would say is SBA doesn't have a bunch of strings attached to their loans. So long as you make your loan payments, you're generally going to be in good stead with SBA. There's no restrictive loan covenants, which again, people kind of chuckle when I mention that. in good times, that doesn't matter. The problem is in bad economic times, it does matter. The bank quickly can sour on a particular, industry type.
Put you in technical default overnight.
Technical defaults happen all the time. Yeah, and it can be dangerous. You don't have those issues with SBA. So,
are there any specific borrower profiles that make sense for an SBA loan versus those that don't? I mean, what sort of criteria are banks looking at for that?
Yeah, I would say, smaller companies, obviously. If you're looking at an SBA loan for a business acquisition, then you're not going to probably finance a company that does in excess of, say, 100 million in gross revenue. It's going to be lower than that, maybe a lot lower than that. Same with partner buyouts. I mean, they tend to be more on what I would consider the small to mid-sized companies. I think like Wall Street, we consider them micro businesses, of course. But we do everything from startups all the way up to the 100 million in gross revenue. So it's kind of everything in between. I mean, I would say our typical customer is probably in that $5 to $20 million gross revenue range. Yeah.
What do the banks do in order to determine, when a borrower comes to you and says, hey, I'm buying a business. I need $4 million. Do you guys get involved in saying, okay, is this an appropriate transaction value you're paying? Do you guys solicit third-party appraisals? How does that work?
Yeah, we always have third-party appraisals on business acquisitions, and frankly for equipment and real estate as well.
Okay.
So yeah, I mean, we generally know where things should be, and obviously when we get the valuations back, we take a look at them and to try and determine, are these reasonable comps? Do these multiples make sense? When they aggregated all the different ways to look at it, does it make sense or not? And we've been known to push back to the business valuation firm. But yeah, we have to have those, not just for our comfort, but also for SBA's.
It's a regulatory requirement?
It is.
And when you guys are underwriting these things from a credit parameters perspective, are you looking at like fixed charge coverage? What sort of things are you actually looking at when you model this out?
We're mostly looking at the cash available that's thrown off by the business being acquired. So we're going to look at their EBITDA, basically, predominantly.
These are largely cash flow loans.
Yeah. I mean, it's rare that you're going to have a business acquisition that doesn't cash flow, or unless there's a very well-documented business plan with really detailed assumptions that make sense that pass the smell test to tell us how you're going to turn it around. But in most cases, an acquirer who we finance is buying an existing cash flowing business. So we're going to take a look at the strength of the business itself. And generally, from a debt service coverage standpoint, we're only looking the SBA's minimum, which is a 1.15 times coverage on either the historical numbers or on a projected basis going forward. And I would say that means our credit box is much broader than ordinary conventional lenders like banks. So we're going to look at that, but we're also going to look at the personal financials of the acquirer, of the business owner, and make sure that this isn't going to stretch them too much. We want to make sure they have enough liquid net worth to cover the operations if they get in a pinch. We want to make sure that they've been a responsible borrower in the past. So we'll pull personal credit and not just look at the FICO score, but actually look at the credit report itself and make sure they haven't recently charged off something or been late on their mortgage payment or things like that. So it's a little bit of it's a little art, not just science. And so we're looking at things from a global perspective, and we do a global debt service coverage ratio, which we typically want it to be at least 1 to 1 times.
What about collateral and personal guarantees? How does that work?
So all SBA loans have a personal guarantee, and I know plenty of borrowers have squawked about that in the past. From my standpoint, having been a non-bank commercial lender, where I've historically relied on large commercial warehouse lines of credit, which I have to personally guarantee. I have very little sympathy, as you can imagine, because I've had hundreds of millions of dollars that I personally guaranteed, which, by the way, I don't have. But I can sleep at night because I know I have enough confidence in myself and what we're doing that it's all worked out fine. But yeah, so all SBA loans have collateral. It's a requirement. But we operate a little bit differently than most SBA lenders and certainly conventional lenders in that we follow the SBA's SOP, which means you can't turn a loan down for insufficient collateral. And frankly, if you think about it, that's why the government guarantee is in place.
Because the sufficient collateral doesn't exist. Otherwise,
in most cases, yeah. I mean, otherwise they might be able to get traditional financing. Not always, especially if we're talking business acquisitions. But yeah, SBA government guarantee is typically 75% of the loan amount. So I look at that and go, well, that's in essence my collateral coverage right there. But we do have to attach to other things that are available to us. And so, sometimes we take borrowers' personal residences, a second or third position on that. We often will file UCCs on equipment and inventory and things of that nature. But again, we may not be fully collateralized on that loan, and that's okay. We still want to follow the spirit of SBA's rules, which is to still make that loan and not reject it just because you have insufficient collateral coverage.
How do you deal with guys that have, they're based in the United States, they're buying a business in the US, but they've got a couple of homes abroad?
Right.
I mean, it's hard to foreclose on those.
I wouldn't even touch them.
Yeah.
Yeah. And we sometimes have situations where someone has, particularly, SBA, what was it, about 6 or 9 months ago, got rid of what was called the personal resources test, which meant you could get an SBA loan if you qualified, all else being equal, except for the fact that you couldn't be too liquid. In other words, you couldn't be too strong of a borrower. Meaning if
you have $50 million in a passport savings account and you want to borrow $4 million, they're going to say sorry.
Historically, SBA would say sorry.
Okay.
They got away with this rule. And what it was, to be very precise, it was if you had liquid net worth that was unencumbered, non-retirement, that was larger than the project that you wanted to finance, the SBA presumed that you should just pay cash for it, which you and I know that's silly. Why, even if you have cash, why would that's one of the benefits of having cash is you don't have to put it all in.
Right.
You're an attractive borrower, right?
Right.
So they finally got rid of that last fall. And what it means is I think it's smart and I've been lobbying for this for years with them. You want to bring in more successful, more financially secure borrowers into the program. It actually will enhance SBA's guarantee portfolio by having these people. Yeah. So no longer do we have these situations where, a doctor wants to buy an office condo, a medical condo, and he's got a couple $100,000 more in unencumbered, non-retirement liquid net worth, and I have to tell him go buy a boat or something in order for us to do the deal. And I've had a few of those conversations over the years. So we don't have that situation anymore, and I think consequently we're looking at much, much stronger borrowers than SBA's ever looked at in the past.
Now you've lobbied for years, and I remember a couple of years ago, we're having lunch and you were talking about, I think you had just recently been in front of one of the Senate committees.
Yeah.
So what have you done with regard to the regulatory framework here in the U.S.?
I've done a lot over the years.
Yeah.
I've been doing this for, since 1998. So I've testified before Congress in front of the U.S. Small Business Committee on Entrepreneurship for the Senate. I've submitted testimony multiple times to both the House Committee and the Senate Committee. I've lobbied the trade associations. Funny, SBA 504 never used to be able to allow for refinancing commercial real estate. I was the first guy that was pushing for that. Right now, as I mentioned earlier, there's legislation that would bump the SBA 7A max from 5 to 10 million. That's something I've been pushing for a couple years now. During PPP, we were the 6th most active PPP lender in the country, and I was at the very beginning dealing with who at the time was my senator in Florida, Marco Rubio, who was the chairman of the Senate Small Business Committee. And starting, I think it was March 9th, when President Trump came on from the Oval Office talking about COVID, and he said that he's going to have SBA offer $50 billion to saving America's small businesses. And I happened to be on the phone with someone I consider the SBA's media authority. And he's a good personal friend of mine. We were on the phone, and my wife kind of comes out of my lanai and she says, I think you want to get off the phone with Bob and come in here and listen to the president's speech. I've already paused it, so you'll be able to watch it from the front. So I stay on the phone with him. I come back in, and we're watching it together. His wife had done the same thing. And we're watching it literally second by second, and we get to this part where the president mentions SBA. I don't think the president of the United States has ever mentioned SBA in an Oval Office, so that alone was shocking to me.
Yep.
But then he says 50 billion, and both my friend and I were like, did he say million or billion? And I rewound, and we played it again, turned it up. No, it was billion. Well, the irony here is 2-3 weeks later, that 50 billion turned into 254 billion. And that was just the first round of PPP. Eventually, PPP got up to 700 and 96 billion, I believe is the number. So it was a massive, it was the largest, governmental program dedicated exclusively to what I think is the backbone of America, which is small businesses. Nobody even got anything close to that. I mean, to put things in perspective, Paul, the average SBA budget annual lately has approached about 30 billion.
Okay.
So this is, 20, 25 times what SBA's ever done in its best year is what they push through. So bottom line is, I was talking with Senator Rubio at that time because I knew his staff very well, and I'd go up to Washington and lobby for a lot of different reforms over the years, and we started talking about this program, which came out of a think tank, and we started discussing it, and we were on many, many calls from that point forward, talking about, what is it going to look like? And there was a lot of suggestions made by myself and my CFO and my COO at the time that they listened to. A lot of they didn't, and the biggest one that they didn't, frankly, is that they didn't listen to what is a fundamental tenet of SBA lending, which is, and at this point, all commercial lending, which is to get tax transcripts on the tax returns that you're given, whether it's business tax returns or personal tax returns. And I was pretty adamant, how can we make an SBA loan without having tax transcripts to validate the financials that are submitted to us?
Yep.
And I remember distinctly, I don't remember if it was Senator Rubio or one of his legislative directors who said, look, we're just trying to get the money out the door as quick as we can. We'll clean that stuff up later. And I said, well, you're going to have 10 or 15% fraud if we don't do this. And they said, well, we'll deal with that later. And I was pretty prophetic in that that's what we've dealt with. Yeah. Now, it hasn't been as bad in PPP as the program that SBA administered directly, which is the EIDL. That's when, if there's a tornado in rural Kansas, FEMA comes in, but so does SBA. SBA is actually writing checks to those folks. Well, this is the most EIDL had ever done. And it was administered directly from SBA employees and their contractors. And if you read the headlines, the fraud in that is a lot worse than in PPP. So it was a crazy time for sure.
So you folks were the sixth most
active. Yeah, we did just under $5 billion, and we did close to 300,000 PPP loans. Yeah.
During the height of that, how many of those were you doing per day?
I can't remember units, but I will tell you that in 2021, we had to keep bumping up our lenders' ability to actually ACH or wire funds, and we went from a daily ACH limit or wire limit of 25 million, we got it up to 175 million a day. So there was probably 9 or 10 days there where we were pushing out $175 million a day, which is extraordinarily nerve-wracking, by the way.
The SBA is not writing these checks. Where are you getting this money to lend?
So that was another aspect that I did, which is we actually leaned on the Federal Reserve. And the Federal Reserve created what they called the Paycheck Protection Program Liquidity Facility, the PPPLF. And it was part of the regulation that came out that they were going to do this. The problem is they enabled it for depository lenders, meaning banks, credit unions, and they mentioned that they would do it for non-depositories, but they hadn't done it right out of the gate. Because if you think about it, they were producing money out of effectively thin air.
Correct.
It doesn't matter how big you are, you didn't have enough cash on your balance sheet to be able to push these loans out. Even just basic lenders needed this facility to help them. Well, the problem is, there's a guy like me and a bunch of other folks out there who are non-bank lenders who are approved by SBA to make loans, and this is an SBA program, and we don't have enough liquidity to make these loans.
And you can't tap into the Fed.
Well, we couldn't at the time, and I started lobbying the Fed left and right, and it was pretty ridiculous. I almost had like a mind map of, okay, I've talked to the Fed in Atlanta. I knew somebody who's in Pensacola, one of the branches. I got somebody in Jacksonville. I had this ridiculous mind map, and I'm calling these people daily, in addition to me in the trenches processing these loans and keeping my staff focused and worried that we're all gonna get the COVID and die. All these types of things are going on. But eventually, it was interesting. I was my only downtime during that period. I was working about 20 hours a day, like no bullshit, 7 days a week for months at a time. But my only solace every
You
morning.
look way healthier now, by the way. You did that. I remember like back in those days.
Well, I lost like 40 pounds in April of 2020. I mean, it was crazy. My wife and my chief of staff were like making sure, like feeding me, like sliding, you know, the metaphorical tray under the door to make sure I ate. But what I would do every day just to keep my energy up is I had a sauna on my lanai, and I would go in my sauna and I'd just try to keep up on something, read or whatever. And ironically, I'm going to geek out on you for a second. I actually had an ABA, an American Bankers Association white paper that I found, and I was flipping through it in the sauna one morning. And this is, by the way, I would sauna at like 6 in the morning and then hustle to the office. Later, we would work from home. But there was a section describing the emergency powers of the Federal Reserve, and one of the things that they said in there, and I'm not going to quote it directly, but it was basically in an economic crisis, the Fed could utilize its emergency powers to offer funding even to non-depository institutions like what we were. And this had previously only been contemplated like if there was a huge crop shortage or something and there was a farmer's bank or something that couldn't do it. But they'd never lent to a non-depository before. And I seized on those like 2 or 3 sentences and immediately went to town. And I was dealing with folks on Capitol Hill. I was dealing with folks within SBA because SBA had a vested interest to make sure that these loans got out there and helped save America's small businesses. So they were pushing, and there was a guy at SBA who would have meetings daily most of April and into early May with his counterparties at the Federal Reserve. I was calling on them. We're coming at all angles on this. Eventually, the chairman of the Federal Reserve announces that, okay, now they're ready to roll it out. And we had already prepped all the paperwork ahead of time because it's a big process to go through this. And it was very gratifying to be the very first non-depository to actually have our paperwork in and to make the first PPP loan, or any loan for that matter, from a non-depository borrowing from the Federal Reserve. And we actually
fresh cash conjured out of thin air, right to your doorstep.
Exactly. And we had to sort of teach the Federal Reserve what this means and how to administer this. And it was mostly my CFO and I at the time, and it was a little crazy. We were dealing with the Minneapolis district feds for some odd reason, but yeah, a lot of our best practices that we were teaching them, they then would utilize for other non-depositories at the time. And it was, but yeah, I mean, like you said, we literally created money out of thin air, and but I'm glad we did, because I mean, there's been fraud, and there's a bunch of people that should have never gotten the funds. They were able to dupe lenders. I think lenders in general did the best they could. Nobody came out and taught us exactly. Somebody from the FBI said, okay, you're getting ready to make these PPP loans. Here's all the things that you need to look for. We literally we had a working document. It was very fluid that we were constantly adding like things that we would notice that were clearly fraudulent attempts. And that document within our staff got up to like 15 or 18 items by the end of it. And it was, we were doing things to uncover illegality that nobody ever taught us to. We're bankers, for God's sake.
I remember when we had lunch a couple of years ago when we were talking about this, you were saying something, in fact, I'm going to probably butcher this, but like, wasn't there like example tax returns online, and like people were just like downloading it and actually using that as their tax returns?
Yeah, I heard about it. I finally saw a couple instances of that. Like, we're in the middle of this thing, and it's literally a hurricane. We're in the middle of trying to help as many people as we could. We didn't even know how we were going to get paid, by the way, at this time, which is ironic. But I just kept telling my staff, let's just focus on doing the right thing. Let's help as many people as we can. We'll worry about how we're going to get compensated later. And ironically, that became an issue with my partners and I. Like, we just were trying out good faith to help as many people as we could. But yeah, you're right. I mean, there was stuff apparently on the dark web, how to fill out the forms. Literally there were templated, tax returns, 940s, 941s.
Like dummy numbers.
Dummy numbers. And it was interesting when I would spot check these things, just for quality assurance purposes. I got very good at noticing, okay, this is somebody who used the template because it's the same, marketing expense every year. It was the same whatever, same dollar amount, rounded numbers, all these types of things. And you could just see this pattern, and then you start rejecting that stuff. But yeah, I mean, it's just, it's funny. The New York Times did a piece on me where I said something like, I've lost a little faith in humanity, and it's true when you're dealing with this and you're shouldering, because I'm a bit of a empathetic person. I'm shouldering this pain and suffering that a lot of these people were dealing with at this time, and then you have these folks that are just trying to screw the system. It was really depressing to watch, and it really does make you question. Like, I know there's bad people in the world, and I taught my kids this, but it's really sad to see it, because those folks were literally robbing funds from others who were deserving of it. And fortunately, I think, in general, PPP helped, I think, over 7 million small businesses. But there were still probably hundreds of thousands that didn't get funds, and the funds just frankly ran out. And too many people were buying, $30,000 watches and Lamborghinis and all the other crap that they were doing. And it is a little disconcerting to see that. It was just frustrating. So, but it was a crazy time, man. My staff and I had death threats, and we had to refuse.
Death threats because I'm not getting my loan?
Either we rejected them because of fraud reasons, suspected fraud reasons, I should say, or, we couldn't get the funds to them fast enough. I mean, to this day, Treasury Secretary Mnuchin was in one of his famous press conferences in March of 2020, said, PPP, we're getting it passed. And that was the largest piece of legislation in America's history at the time. They got passed in something like 12 days. It was ridiculous. So they didn't even know, classically, Congress doesn't even know what's in the law that they're passing. And it's up to the regulatory bodies to fix it. But he came on camera and he said, you can go into your bank in the morning and walk out with your check that afternoon. And I'm like, oh my God, that was ridiculous. And then the SBA administrator also had this ticking clock, how much funds were remaining, which all that did was create a tremendous amount of, crush, panic. I mean, my God, people were panicked. And so, so we had all sorts of threats that we got because we didn't get the funds out the door fast enough, or if someone is a bad person and we turned them away. And I remember having to tell my staff at one point, look, if they start cussing you out on the phone, there's a very high probability that that's a fraudster that you caught. And you should just get off the phone as quick as possible and move on to the next legitimate business owner. By the same token, if someone is crying on the phone, that's probably someone who is really suffering, who needs these funds to make payroll or to put food on the table, and you should do everything you can to try and help those folks. So it ran the gamut. I mean, we had a guy who stalked one of my employees, and by this point we were well into dealing with fraudsters on this program, and we literally called one of our special agent buddies who we'd gotten to know, and put him on the case, and I think saved my young employee, because this guy was coming to her house, had her cell phone, found out where she lived, and was coming to visit. And I don't know what would have happened. And the funny thing about that is, I'm just a regular guy like you, but so the first time the FBI calls you, it's like when you're on the highway driving and you're like 5 miles over the speed limit and you see the lights behind you, and fortunately the lights pass you, you're like, okay, it wasn't me. It's the same thing. You get that emotion, that adrenaline when the FBI calls you the first time. But by the 15th time, you're talking about the game last night and saying, yeah, did you see that last minute shot? That was great. And fortunately, that's the kind of relationship we eventually developed with these folks. And we're able to, I think, save one of our employees from God knows what would have happened. But it got to the point where myself and 2 other of my staff at the time, we were still coming to the office. I mean, we brought our guns to the office because we just didn't know what was going to happen. It was crazy, and I'd never seen anything like that. Fortunately, I've never seen anything since. I don't really want to go back. My wife has threatened my life that she'll divorce me if I do PPP number 4 at some point. But the problem is, you and I both know. I mean, the program is done. It was overwhelmingly successful. Yes, there's been some bad aspects to it, but it was overwhelmingly successful to keep the American economy chugging along during a really rough time. So it's on the shelf. It's going to be pulled off the shelf at some point. Again, God forbid, if we have some situation like this. And maybe I'll be long retired by that point. I don't know.
Well, so since plowing through this COVID era, you know, a few weeks ago at Rob's birthday, we were chatting, and now I understand, did you buy a bank? Did I hear you right?
Yeah.
Okay.
So my next go round. So it's my partners. We made them. It turns out we did very well financially during PPP. But we remember I had said we were basically in the process of moving them out of the way.
Yes.
They had, you know, these guys have funds. The funds have typically a 5 or 7 or 10 year time horizon. We were approaching the end of their time horizon, so they wanted out. They made their return on us. They wanted out, and unfortunately, the pandemic happens and completely disrupted that. And I had to sort of drag them kicking and screaming to allow us to do PPP. They didn't want to. It was too many unknowns.
Yeah.
You know, the big institutional guys, they're generally speaking, they're not operators. They've never been operators. They're not entrepreneurs. They operate by spreadsheet, and anything that's unknown or uncertain freaks them out. And you know, only half of the financial institutions in America, Paul, even made PPP loans. There was like 11,000 at the time. About 5,500 actually made loans. So big chunk of people wouldn't touch it because there's just too much uncertainty, right? So I had to drag them kicking and screaming. Turns out it was probably the best thing that we ever did. And they wanted out. At the end of it, they wanted out. You know, it took an extra 2 years. Now they definitely wanted out, even if, and they didn't want to double down. And it's a shame because it was not a situation I wanted. You know, I had a great team. We literally went through the war together, and it just brought us that much closer. And these people, you know, they would run through a burning wall for me at this point, and I'd do the same for them. So it's really frustrating that they just said, you know, we're out. And without an alternative, we had to wind down the company, and that's what we were doing. And so, but you know, like the phoenix out of the ashes, something else rises. And in this case, a longtime buddy of mine, I'd known him for over 15 years. He was the largest originator and servicer in another government guaranteed program, which ironically is done by the USDA, the United States Department of Agriculture, which sounds weird, but it's rural lending and underserved lending. And he was the largest originating and servicing USDA B&I lender, and then USDA has a bunch of other ancillary programs like that. And he basically approached me. He knew what had happened, and it was a tragedy. And he basically said, "Look, we've tried to do SBA, but we're not very good at it. And you guys are one of the best, if not the best. How would you like to come over here?" And I said, "Okay, sounds good to me." And so I've made it. By the way, he owns a bank. The bank is not like a typical bank, meaning the bank is a funding conduit for us to actually fund our government guaranteed loans, where we have a fairly high margin because we turn around and sell off the guarantees in the secondary market. We still service our loans, so you know we still have skin in the game, and we also retain the unguaranteed portions on these loans, whether it's USDA or SBA. But so yeah, I'm the second largest shareholder in the bank. He's the bank holding company chair and CEO. I'm the president of the bank holding company, and I'm the president of the SBA division. And we successfully managed to move about 95% of our employees over and kept the band together, as they say, and they love it. And we're hard charging going forward. We think we can do a lot of really interesting stuff, help a lot of business owners with the model that we've created here.
So you'll do the full spectrum in addition to the Department of Agriculture stuff. You'll also do the SBA, the 504, and the
SBA 7A, all the different USDA programs. We're working on getting a CDFI license, which is another interesting program that allow us to do some other esoteric lending. We're doing PACE loans, which is another interesting program for commercial real estate. Just a whole host of things. We're going to probably contemplate doing what's called an SBIC, a small business investment company, which will enable us to do, pref equity, mezzanine financing, things like that. So there's a whole host. If you go down this rabbit hole of specialty government lending, there's a whole host of stuff in there that frankly most traditional bankers kind of look down their noses at us, and they don't have an idea of what exists, and they certainly don't have the expertise to do these things. But it's pretty interesting, and it's my passion. I love financing entrepreneurs. I've been an entrepreneur for a long time. I came from a family of entrepreneurs, so it's just something that I really enjoy.
Well, speaking about being an entrepreneur, in addition to banking over your career, you're involved in a variety of other stuff.
Yeah.
So I want to talk about that.
Sure.
Next week you're getting back on a plane.
I am.
Going over to the UK.
A couple days from now, yeah.
Okay. What's on tap over there?
In the UK? I'm a former soccer player, or football as they call it, and always dreamed of owning a soccer team. And actually, last fall I invested in an English team that is on the cusp of going up to the Premiership. It's called Ipswich Town, which was a very successful team in the 70s and 80s and kind of fell on bad times. And a couple buddies invested in it. Got a pretty good value when they invested in it, and it got promoted last year. There's this notion of promotion and relegation in most international football. We don't have it here in the States yet. But they got promoted from the 3rd tier to the 2nd tier, and now they're currently in 2nd place. They have 2 games left to play. They got to get 4 points, 3 points for a win, 1 for a draw, 0 for a loss. And if they get 4 points out of the last 2 games, they'll go up into the Premier League, which is roughly worth about $400 million to the team. It's a big deal. So I'm just, if you're a watcher of Ryan Reynolds and Deadpool and Rob McElhenney and what they've done with Wrexham, they're a couple levels down from us. I'm ahead of those guys a little bit in this regard. But
so you guys have a lot riding on these next 2 games.
We do have a lot, which is why I'm going. And it's going to be a very consequential game. It's the final home game of the season. Fortunately, it's against a team that's much lower down in the table. But if we win that, that is lights out. It's going to be amazing. And then I also invested in a team here in the States, which is in the USL Championship, which is the 2nd tier in the United States below Major League Soccer. Okay. That's a team in Rhode Island. I don't have any affiliation to Rhode Island other than I think it's a beautiful place. But the Pawtucket Red Sox, AAA team for the Boston Red Sox, moved out of Pawtucket several years ago, and they've had this huge, vacancy in the market. And so we worked with the same pension fund that we had at Ipswich Town to start a brand new soccer team there called Rhode Island FC. Okay. And we worked with the state of Rhode Island and the city, the municipality, and the county, and we're building a $110 million soccer-specific stadium right on the riverfront. And my great addition to all this is I told them, Rhode Island has this maritime tradition. In fact, if you looked at our badge, it even has an anchor and everything in it. And I said, you have an opportunity to do something that's only been done 2 other places that I'm aware of, which is the University of Tennessee and Baylor University, which is where my daughter goes. I said, we can create a sailgating experience. And they said, what do you mean? I said, sailgating. All these people in Rhode Island own boats.
As opposed to tailgating?
Yeah, as opposed to tailgating. Take your boat up the river, dock it, tailgate, sailgate, and then go watch the game. And so we're very excited for that. The stadium doesn't open until probably June of 2025. So they're playing offsite at a local college at the moment. But yeah, it's a very interesting experience. Other than the New England Patriots and the Red Sox and the New England Revolution, there's no other professional teams up that way other than Rhode Island FC. So it's pretty exciting.
Well, you love the sport. Are these good investment opportunities? I mean, I
get asked that a lot.
We talk to some of our friends here who have done that, and it doesn't
sound Puerto Rican basketball. Right?
It doesn't sound like a great deal.
It's
Are you in that as well?
No, I'm not.
Okay.
I do like basketball too, but I don't know about Puerto Rican basketball. If that has quite the opportunities that some of these others. Well, I will tell you, it's. I've gotten to the point where if I make an investment, I want to have some fun with it. I've got plenty of investments that are cash flowing, and that's great, and hopefully increasing my net worth. But I also want to have some investments that are fun. Yeah. And this is other than work, this is my only hobby. I mean, I don't have anything else other than I used to play and I watch soccer. So this is it. And on the English Championship side, soon to be Premier League, hopefully, that's the big leagues. I mean, that's about as big as it gets. So the Rhode Island thing is, it's decidedly, downscale by comparison. But yeah, I think when you invest in something like that, you definitely, these are not going to be cash flowing investments like, they're giving me a check every year or something like that. I'm not expecting that.
Yeah.
Obviously, you're investing in something that you hope appreciates in value over time. And maybe somebody comes in and offers us a bunch of cash to take it over. It's also a long-term thing. So yeah, like I said, I got plenty of other investments that are more traditional in a sense. This is kind of exciting and fun, and it's great to be a part of something. And in the case of Ipswich Town, much like Wrexham, I mean, it is the pillar of the community. The town lives and dies by that team and what it does, and it's pretty magical to be a part of something like that, really. And we don't have opportunities like that very often. So I'm not sure that Puerto Rican basketball rises to that level.
No, it does not.
of excitement in the community, perhaps. But
You're making me think of that as you're talking about this. I'm thinking about Sudeikis and what's that?
Yeah, Ted Lasso.
Yeah,
yeah.
That's what I'm thinking about with you going over there. And like,
I'll tell you, watching episodes, the first season of Ted Lasso, that was about the only time I had during PPP. I mean, it was pretty special. And I actually knew that the show was being developed and coming out. And I would tell my wife, who's not quite as passionate about soccer as I am by any means, I think you're going to like this show. I'm excited to watch this show. And she refused to watch it for a while. And then finally, I convinced her, and she watched a couple episodes, and she's like, okay, now I get it.
I actually think it's a pretty good show.
It's a great show. Yeah. It really is. Comedically, but also just... if you're a passionate soccer guy, to be able to bring that to others is pretty exciting too.
Well, in addition to soccer, I mean, you're also in other sports-related type ventures.
Yep.
So I want to talk about your latest.
Sure. I do like the commercial. Like,
let me see this.
Yeah, it's not the most attractive label.
This is the final label. This is what you guys.
That's actually it. Yeah.
So it says barcode.
Barcode.
Okay, so let's talk about this.
Barcode is a fitness water, and it's not. It's basically competes against Gatorade, I suppose. Vitamin water, Prime, some of these things. But unlike all that stuff, it doesn't have sugar. It doesn't have artificial sweeteners. It uses monk fruit. It's the first fitness water that has like ashwagandha and vitamin D and magnesium and other things. And it's predominantly coconut water. And the only reason I invested in it is, again, I have some friends that did it. I think it's got some tremendous upside in terms of nobody's quite positioned an alternative product for that marketplace. It's healthy. It's basically healthy fitness water. And we're fortunate that one of the investors, and actually the spokesperson, is Webby. I always mispronounce his name, but the soon-to-be NBA Rookie of the Year. This is one of only 4 products that he's endorsed. And one is Louis Vuitton. I can't remember the other 2. I think one's Nike. But yeah, so this is a big deal. It's already the official beverage of the Brooklyn Nets, the Miami Heat. I'm pretty sure the San Antonio Spurs here pretty soon. Webby's about to go and play for the French national team in the Olympics this summer, and I have a feeling that Barcode's going to continue to climb. In this business, it's all about getting retail placement. And sponsorships, obviously, and we're in virtually all the grocery stores in Texas. We're in Costco on a trial basis right now, and if that expands, I mean that's again lights out on something like this. But it's good to be a part of something that's helpful to people, and we'll see.
When did this launch?
This launched 9 months ago, maybe.
Okay.
Yeah. So there we've got 5 flavors, I think, about to be. We're going to have one, just like 50 Cent had his vitamin water flavor.
Yeah.
Webby's about to have his barcode flavor.
So in addition to being an investor in this, I mean, are you actively involved in strategy here at all?
Not so much this. This is a little outside my realm of expertise. Yeah. I mean, I'm a pretty good marketer. I mean, people in the SBA world know me as probably the best in the space. If they ask, sure, I'll give them some feedback, but I don't know how helpful I can be in that regard. On the soccer side, however, I've been very active in terms of offering my feedback, just kind of as a fresh set of eyes. I'm not trying to become one of these guys in England who they live and breathe it from a management leadership standpoint, administrative standpoint. I'm not going to ever become that, I don't think, but I can also notice things comparing what we do here in America or either other places internationally to what they're doing there, what other opportunities they could pursue. Sometimes it's as simple as dig into the rules and regulations and see what hasn't been covered so that you can sort of push the envelope a little bit and think of something that maybe the regulators hadn't thought of. They may close the quote unquote loophole eventually, but in the meantime, there may be some opportunities for you to so-called exploit things that help grow the brand, grow the enterprise more. So yeah, I've given a lot of feedback in that regard. We'll see what happens.
You must spend a lot of time in the UK, because when I showed you that Andy Ransom video this morning, like you just took a look at the bar for a second. You're like, oh, lower the land.
Yeah.
So do you spend a lot of time there?
Since investing in Ipswich, yeah, I've been about monthly, actually. Yeah, the Lord of the Land, the Guy Ritchie and David Beckham.
Which, by the way, you said something that I think struck me about that place. Like the food is outstanding.
I would say it's one of the top gastropubs in England, in London, for sure.
We had a brunch there, like on a Sunday morning brunch. Like we were filming later in the week, and they were like, "Hey, come on in! Like you guys got to check this out and taste our food. You got to get a feel for it."
Right.
So yeah, we'll do that.
It
was awesome.
Not your traditional English food by any
No.
means. No, much better. No. It surprised me, actually. I did not see David and Guy, however. I don't know if you have, but
we didn't see him.
Maybe some other time.
No.
Yeah.
But we did enjoy it. We enjoyed the food, and the people there were awesome.
Yes.
Like all around great experience. So.
Yep.
Anyone that goes to London should check it out.
Absolutely.
But with regard to these ventures, I know you've done a lot of stuff with YPO folks over the years, and so that's been an important part of your life, and I want to talk to you about that. When did you join YPO?
I joined YPO in either 07 or 08, so it's been about 15 years.
And what have you got out of it?
Well, I've had a lot of business relationships out of it. I think as men, as we get age, we don't have as many close relationships perhaps, and so it's good to have similarities with others that you can relate with, and so I've gotten a lot of friends out of YPO over the years. I've done business investments with other YPOers. I've financed a lot of YPOers, and in just my core business, I've probably financed close to 100 YPOers, and then if you throw in PPP, I financed like 900 YPOers, which some of them really pissed my staff off after a while, because there was some guys.
I'm in YPO, like give me.
That's exactly what happened. They would call to the point where I had to like remove my mobile phone from the YPO, the intranet that we have, because I was getting calls during that time. Basically, there were several people who would say, "Hey, move me to the front of the line," and I'm like, I can't do that. I can't move. Appreciate that you're YPO. Appreciate that you used your resources to get a hold of me, and I actually answered your call, but I can't do that. That's not fair. Oh, we're in YPO together. I'm sorry.
This is the way it works.
I mean, I will personally shepherd your loan through and get it done for you, but I cannot let you jump the line. That's not fair to anyone. So that pissed off.
You weren't running a nightclub over there.
No, it's a little bit different in a time of crisis like that. So so those are some things. I mean, I've been in YPO masterminds, or not masterminds, but forums is what we call them. I have some really close personal relationships that have come out of that. My wife's been in a spouse forum, or the last couple of years, we're actually now in CEO, which some people don't even know about, which is kind of the next level beyond YPO, and we're in a spouse forum together, which means my wife and I, along with other couples, are in forum together.
Together.
So, yeah. And I've done a fair amount of traveling with YPO, going to different events around the globe. So that's been fun.
Yeah.
But yeah, I think it's, the reality is, I come from a very small town in downstate Illinois, outside of Peoria, a rural town of, I think we had one stoplight when I was a kid. Now they're up to 2, under 5,000 people. And, I left, and I haven't really much been back, but it's tough to find sort of a peer group. And YPO provided that for me. And people that are going through the same types of things you're going through. You don't see that in a lot of places. It's the old adage, it's lonely at the top. People don't understand what you're going through. And if you tell your staff how well the business is doing, then they all
want more money.
They want raises. Yeah. And if you tell them how terrible the business is,
they look for new jobs.
Exactly. So how do you have these conversations with people close to you? And you can only have so many conversations with your significant other also, because among other things, you come home after a rough 12, 13-hour day, and they say, "So what happened today? Give me the blow-by-blow." Well, if I give you the blow-by-blow, then I've just relived the entire miserable
traumatic experience,
which I don't want to do. So you need some peers that you can relate two that are going through the same types of things that you're going through. And so that's where I think YPO really serves a great need. And then obviously there's all the educational stuff that you get out of as well. Yeah.
Yeah. I was telling you earlier, Chris, I remembered hearing your name on one of the Dan Kennedy sessions from like 15 or 20 years ago. And I was like, wait a second, is that Chris Hurn? The Chris Hurn I know.
Right.
So you were there. So you're obviously into direct response. It's been a part of you building businesses. How did you get into that?
How I got into it was, you probably remember this in the 90s, there was these like big arena events. I can't remember what it was called, where they'd like bring in like Norman Schwarzkopf, who would be a speaker, and they'd have, what's the guy's name? Gosh, if I say his name, you would know him. You know, they didn't have like Tony Robbins level, but close to that. And Dan was one of them. And Dan was at the very end, which I found out later, he actually asked for that. And he came on classically, and of course, all this is scripted, knowing Dan. He did this to the letter. He basically said, it was at the end of the day, everybody's leaving, they've been motivated, all this stuff. Victor Hansen was one of the guys, a bunch of these guys. And you're getting out of your seat in the arena to leave, and he's like, so he said something like, if you would just sit down, I know you want to go to the parking lot, it's going to be crowded, you're not going to, just hear me out. He said a few things that like made it very relatable, and you're like, okay, that's kind of bold. All right, let me sit back down and hear what this guy has to say. And he basically came from a place of, you're not running your business, you're running your business, you're not in the business of running your business, you're in the business of marketing your business so that you get more business. And what I mean by that is, most people you talk to, hi, I'm a dentist. No, you really need to change your mindset to you're in the marketing of your dental practice. And that really resonated with me. And so at the end, of course, it was one of these pitches to buy his product, and it was cassette tapes back in the day and everything, and it was terribly produced. I mean,
the worst.
It was the worst. And it was like $300 for this.
They have some like crooked printouts with it, like photocopied 70 times.
If you know Dan, he was never about like things being slick and anything like that. He just kind of threw it together. But it was like $300 to buy this, and this is back in the mid '90s, and that was a lot of money for me at the time. But I went ahead and did it, and my wife was not happy later. But then it sat in my closet, classically, which is a lot of people do this.
I think it has to. It's got a season for a while.
It's got to marinate. That's right. And eventually, I blew off the dust, and I listened to this stuff, and I'm like, this is genius. And between that and I think it was Jay Abraham.
Oh yeah.
Like, that revolutionized my thinking about what I did, whether it was as a management consultant, working for Marsh McLennan, or when I had my own companies, whether it's Mercantile, Fountainhead, or now Community Bank Shares. And I never once took a marketing course. I've got 2 bachelor's degrees. I've got a master's degree from Wharton. Never once took a marketing class, but I'm smart enough to try to become self-taught about things. And Dan was a sort of a cornerstone of that for me. And I learned about direct response marketing. My first business that I had in the finance industry, which was Mercantile, we were the first ones to have an actual website that was direct response. That wasn't just brochureware, is what I called it back in the day. I was also the first one to ever have a video blog, not just a blog, but actually a video blog on camera. I was the first one to have an SBA podcast, and it's called what is it called? SBA Loan Experts.
Sounds super exciting.
Yeah, it was the top podcast in our industry until I stopped doing it about a year ago while we were sort of winding down Fountainhead, and so I haven't gotten back to it, but I hope to get back to it at some point. But just all these different things. When we go to a lot of conferences as a company, I don't go to as much anymore because if I go, I want to be a speaker. And obviously I've been a speaker at a lot of stuff, but like we have a whole strategy about how to go to a conference, how to maximize what we get out of the conference, whether it's pre-marketing, pre-conference marketing, post-conference marketing, the deliverables that we get, how we push for extra deliverables that maybe aren't on the card, all these different speaking opportunities so that we can be what I call omnipresent. You want to do all sorts of things. Everybody, and I've taught entrepreneurs this stuff over the years. I've done some coaching for entrepreneurs, and everybody wants that one silver bullet, that one thing.
Yeah.
And the reality is there's not one thing, which makes it difficult because everybody, especially in the direct response world, they want to say, well, I did this, I ran this ad and I pushed them to this custom 800 number and look at our response.
Yeah.
The problem is that's just one aspect to all this. You've got to be kind of everywhere all at once. And it's frustrating because if you're a data cruncher, you don't really know what particular marketing thing tipped them over.
Talk about this in our business all
but
the
you
time.
got to do all of this stuff.
And like some folks in my business and my company here in Puerto Rico will say, well, wait a second, this is what's working because this is where we're actually getting the responses from. But how did they actually get to that? Like, it's like you said, you got to be omnipresent.
Like we do weekly emails. We take the email content and 80% of it's the same, but that 20% we've customized it for a particular segment of our database.
Yeah.
For instance, I also write articles. I've written for Forbes for years. I do TV interviews, and we repurpose that stuff. So if I write something for Forbes, I also push it out on my blog.
Yep.
We also might do a podcast about it. If I'm on Fox News or CNBC, we'll also distribute it across multiple other of our channels. We'll do social media. We do all these different things. We do a lot of SEO work, organic search engine. We do a lot of pay-per-click ads. We do some complicated marketing things where we've got a specific target audience that we're able to get information from or send information to, but we have multi-steps. You and I were talking before we came on camera about, sending the old FedEx package.
Yeah.
People initially, their reaction is, oh, shoot, that cost me, $20, $25 to send it. Yeah, but that's almost assuredly going to get in front of the decision maker.
They will open another 1,000 that don't actually arrive. Right?
Exactly. Yeah, you can send out 10,000 pieces of mail, and unfortunately, a lot of people think it's one and done, right? I send an envelope out to them, they should respond to me, or I send an email, they should respond to me. What people don't realize is it's a sequence of things, and it's the follow-up that makes the difference. You might only get a 1% response from that first touch. But if you're consistent and you make it relevant to them, you might get a 2% on the second touch. You might get a 3% on the third touch. You don't really know, again, what is the thing that tipped them over. Mm-hmm. But you got to look at it like that. I think of, and again, I learned this from Dan. Marketing is about relatability and numbers. You want to try to be able to communicate to that target in a way that they understand, to make it interesting. How do you stand out in the clutter, basically? And then it's all about numbers in terms of how do you keep touching them? How do you keep arriving in front of them? How do you stay top of mind consciousness? And it takes effort, and it takes doing all these different things. It's not just one simple thing. If I just do this one thing, it solves everything. It might for a little while, but probably not going to continue forever.
Well, you ran one of the largest non-bank SBA lenders in the United States. How did you, when you think about your marketing over the years, it was multifaceted. You had the podcast, right? The SBA podcast. You were always doing interviews. You were doing videos. Yep. Were you doing direct mail as well?
Oh, yeah. And doing what I call dimensional direct mail.
All right.
What is
that?
Pretty, again, back to you want to stand out. So first of all, these days, direct mail, like nobody does direct mail, right? Yeah. Now's the time people should be doing direct mail.
You stand out.
That's right. You should be doing it now. I'm a big believer in not following industry norms, conventions, because if you're unconventional, if you sort of do things opposite of what everybody else does in the industry, you have a much higher probability of standing out.
Yep.
As opposed to like banks. Banks are terrible marketers for the most
Horrible.
part. And they all think, XYZ Bank has got a tombstone. I need to do a tombstone. Well, the problem with tombstones, and we've all seen them advertisements, is what? Just because you did a deal and you told me I funded a $5 million deal and these are the terms and it's in this city, like what? Okay, so what does that mean?
Yeah.
But if you make it interesting to that audience member and you say, well, I made this loan and I can make it for you as well, and they only put down this much money and I benefited them in this way, I increased their monthly cash flow by X, and I did, if you make it more about them, that makes them more attractive to you, and that's what people want. So I have violated industry norms for 2 decades and will continue to do so. And again, the reason you do it is because you want to, the people that are different are the ones that actually get traction and are often successful. When you do what everybody else does, you know, I liken that to you get a reversion to the mean, right? That's what happens. And I don't want to be that way. I don't want to be, you know, mediocre. I don't want to be the average. So you've got to do things that are, you know, non-average, non-traditional. And so to the marketing piece, I mean, dimensional marketing, that's about like having customized postcards, you know, that have the person's name on the postcard, for instance, in multiple places of the copy, for instance, or don't just send a little postcard, send a large postcard, or have, you know, I did, just thinking about this. Do you remember the Da Vinci Code? That was this, you know, back in the early 2000s or mid 2000s, that was like this hot book and everything. Well, I flew to London with my wife and then went to Paris, and I took pictures of different places that were in the book, and I related that to what I called the 504 code. And there was a whole multi-step sequence of me sending postcards back from Europe, so to speak, but that was part of the design about me traveling on the 504 code and what I could find. And I mean, just interesting things like that. You know, I've sent CDs, DVDs out before. I've done, you know, do you remember the World's Most Interesting Man? Remember the Dos Equis? Yeah. So I did like a take on that years ago, and I was the world's most interesting lender. And we had this whole thing.
It's not a hard,
no.
The bar's pretty low for that one, right?
Yeah, but I mean, that's true. But, you know, just different things like that really helped me stand out to the point where today, everybody knows me in my industry. And I don't have to do that kind of marketing anymore. I mean, because that takes effort, right? It takes a lot of creative brain power to do some of this stuff. I don't do as much of it anymore today because everybody knows me. Now I'm about to change that. What people don't realize is I've got a couple people coming down literally this afternoon from my team, and we're gonna start cranking up the marketing machine again to do things that, again, are different than everybody else in the industry. Because everybody's caught up to me, you know, and it always pisses me off when they're literally ripping me off.
That's what they do.
Exactly. So, but, you know, I've had my proteges that do exactly what I used to do 10 years ago or whatever, and they're having success with it today. But I want to keep pushing the envelope and do things that nobody else is doing yet, and that's where we're headed on some of this stuff. But you can't stand out and be maximally successful if you're just like everybody else. You have to do things differently. You got to think differently, and you got to do things differently. And you know, it's kind of fun if you have that sort of underdog mentality to do this. Well, it makes it very exciting.
I'm super excited to see what it is that you're going to do now with this new venture. So I'm going to stay
me too.
I'm going to stay very close. You know, maybe 6 months from now we'll sit down again and track how your new marketing is going. But you know, for folks that might be interested in these sorts of loans, how can folks get in contact with the world's most interesting lender, or at least the world's most interesting lenders team?
Well, first they could probably Google me. That's the biggest thing. They'll see a lot of stuff out there on me, Chris Hurn, Hurn. The company is Community Bank Shares. That's our holding company. To be very blunt, we're redoing the website right as we speak. So, you know, I don't even know that I have an actual website to direct them to right now. So probably better to follow me on social media or Google me. You can email me. It's Churn, C Hurn. Sounds terrible that it's Churn, by the way. I know. From a marketing standpoint, you never want to be Churn. But regardless, it's Churn at communitybankshares.com.
We'll link it in the show notes.
Right.
Maybe we won't link it. I don't want you to get a ton of spam. We'll figure it out.
Yeah, we'll figure it out.
Chris, it's always awesome getting together with you. And I think this is a great interview. So thanks for sitting down with me.
Yeah, my pleasure. Anytime.
Sounds good, brother.
All right.